Assalamualaikum and good morning. We are from Group 3 will present about SLP resources Berhad for subject financial and reporting 2. These are our team members: Nurul Atas Syakira binti Yusuf, S66715, Nurul Ashika binti Riza Pahlawan, S67464, Nadira Hanis binti Muhammad Ainuddin, S67548, Umi Syahirah Aina binti Muhammad Azmi, S67589, Nur Aina Natasha binti Muhammad Sobi, S67651. SLP is a company that engages in the production and sale of goods connected to the plastic packaging, as well as the trade of polymer products in Malaysia, Japan and Australia. The company serves several industries such as chemical, food and beverage, retail, industrial and household. It produces a variety of flexible plastic film and packaging items for both local and foreign market. SLP have 3 company subsidiaries, which are SLP Polymer Sdn Berhad, SLP Cleantech Sdn Berhad and Cineplus Holdings Sdn Berhad.
Next is financial ratio analysis. The first one is return on assets, which is net income over average total assets. This will help in assessing how efficiently the non-current are generating profits. Second one is return on equity, which is net income over shareholders' equity. This will provide insight into the profitability of the non-current assets. The last one is asset turnover ratio, net sales over average total assets. This will help in understanding the efficiency of non-current assets in generating revenue.
Financial ratio analysis. Interpretation of return on assets. In 2023, SLP will be able to generate 6% of the net profit from each ringgit Malaysia of the assets that they own. Compared to the year 2022, their ROA is better because a higher ROA indicates that a business is more profitable and efficient. Second, interpretation of return on equity. Between 2023 and 2022, in year 2022, company will be more efficient at generating income and growth from its equity financing. And lastly, interpretation on asset turnover. Compared to the year 2022, SLP will be efficiently use its assets in the year 2023. The company is able to convert every ringgit Malaysian into 80 cents worth of revenue.
Depreciation. The property, plant and equipment depreciation policy is described in the report. It specifies that over the expected useful life of each component of an item of property, plant and equipment, depreciation is recognized on a straight line basis. This includes determining the asset containing value and performance and allocating depreciation costs efficiently. Impairment assessment. The impairment loss related to a subsidiary Cineplus Sdn Berhad, which started a voluntary wind-up, is covered in the report. Based on the evaluation of the fair value minus the cost selling, the amount that could be recovered was used to calculate the impairment loss. Determining whether the carrying value of the subsidiary asset exceeds their recoverable amount depends on this evaluation.
For the right-of-use asset, information about right-of-use asset is included in the report, including information on depreciations and the effects of changes in exchange rates. This performance and carrying value of these assets will be analysed, and this evaluation be crucial. And then the related party transactions. The linked by party transactions are included in the report besides scheme management, individual and the companies that offer the group service from key management individual. Since this transaction affects the business overall financial standing and performance, it is crucial to understand to analyze the performance and value non-current assets.
I am going to continue explaining the revenue analysis on SLP Resources Berhad. Based on annual report, Based on the annual report, during the year of assessment, which is 2018, the revenue was RM 188,069 million. However, in 2019, the total revenue started to drop to RM 166,849 million. It's safe to say that the fourth quarter of 2019 was the year that COVID-19 started to strike and damage some companies. The year of assessment, which is 2020, was the peak of the pandemic that damaged a lot to SLP Resources Berhad, whose the total revenue was RM 146,993 million. Nonetheless, they succeed in increasing the total revenue in 2021, which is numbered at RM 168,949 million. And finally, in 2022, they will continue to keep their revenue increasing to RM 185,742 million.
Asset analysis. According to the annual report statement of financial position, SLP Resources Berhad has a few non-current assets including property, plant and equipment, right-of-use asset, intangible asset and investment in subsidiaries. Compared to the year of assessment 2022, total non-current assets decreased from 2021, which amounted 71,335,009 ringgit to 69,171,539 ringgit. Other than that, Asap Resources Berhad also has a few current assets, which are inventories, trade and other receivable, current tax asset, derivative financial assets, and cash equivalents. For the year 2021, total current assets are 145,272,648 ringgit, while in the year of assessment 2022, total current assets are 160,098,250 ringgit, which is an increase. To conclude, total assets in the year of assessment 2022 increasing from 2021 were total from 216,607,657 ringgit to 229,269,754 million 50,000 ringgit.
Liabilities and equity analysis. In liabilities, deferred tax is recognized from the result of PPE minus reinvestment, allowance carry-forwards and others. In 2021, Group will have 9,388,000 ringgit, an increase to 9,754,000 ringgit in 2022 for non-current liabilities. Meanwhile, the company does not have deferred tax for their business. Total current liabilities for the group in 2021 are 21,909,472 ringgit and will increase to 26,462,740 ringgit in 2022. Total liabilities in 2021 are 31,297,472 ringgit and in 2022, 36,266,740 ringgit.
Next, for the equity analysis. There are two equities in company which are share capital and reserve. Total equity attributable to owner of the company in 2021 is 185,310,185 ringgit Malaysia, and will increase to 193,053,040 ringgit Malaysia in 2022. The increase in shareholders' equity was attributed to the gain in foreign currency transaction difference in 2022, Apart from the profit after tax for the year, the total of equity and liabilities for the group in 2021 is RM260,607,657 Malaysia, and in 2022 it is RM229,269,754 Malaysia.